Today we'll take a look on Stefan and his trading journey. We'll go over his stats, strategies, and at the end I'll share a tip from top traders. So let's get started. Let's start some with background information on Stefan. Stefan is from Ireland and he's trading on account size $25,000. Stefan is an active trader and his latest trading period has achieved a total profit of $800 before the split, representing a 3.21 appreciation of his account. So let's take a closer look at his overall trading statistics for this cycle. His profit factor is 1.32, so he had 12 total wins and 6 total losses, which resulted in almost 4,000 profit and almost 3,000 loss. That added up to a win ratio of 67%, which on my standards is a solid ratio, showing that Stefan has a solid trading plan. Now let's look at his trading style and his strategy. So Stefan uses a combination of scalping and intraday trading. Scalping, as we already mentioned in our other analysis, is holding trades just for a few seconds or minutes, aiming for small, quick profits from each move. Day trading opens and closes trades within the same day, and basically by doing that you avoid having the overnight risk, which is something some people don't like to do. This approach allows him to react quickly to market changes and minimize risk. Talking about his risk management is impressive. He adjusts the lot sizes according to the instrument, and most of his trades are equipped with stop loss and take profits levels. This way he knows his maximum potential loss and protects his capital. Again, setting up stop loss levels and take profit levels helps you to adhere to your risk to reward ratio you establish in the beginning of the trade. Let's have a look on two specific trades that showcase Stefan's style. So the first one is actually short position on gold. For Stefan's entry, we can see a side trend defined by support and resistance levels. However, early in the morning, the price broke through the support. The price then attempted to climb back, but failed to reach the resistance, confirming the breakout. Stefan noticed the support break and the failure to reach the resistance. He entered the trade at the precise moment. Once the side trend emerged, Stefan exited the trade with 0.8 lots, earning a substantial profit. He was still uncertain whether the price would continue to fall, so he kept 0.2 lots in the trade and smartly set a new stop loss to essentially break even. The price of gold started rising again, broke through the resistance, and Stefan's stop loss was triggered, closing the trade completely. So the entry point was over here, the first exit point was here, and the second exit point was here. The take profit level was established over here, and there was two stop losses, the initial one and the second one set after the exiting the 0.8 lot. This resulted in profit of $860. So let's have a look at the second trade, which is his largest loss. That was at Ustak, and it was again short position. This trade lasted only 5 minutes, making it more challenging to analyze, but it was preceded by an uptrend and the market started showing signs of trend reversal. At that moment, Stefan entered the trade. However, it didn't take long for the market to move sharply against him. Within 5 minutes, Stefan lost $1,000. Unfortunately for him, the trend did indeed reverse a few hours later, but Stefan clearly didn't want to risk blowing his account, so he chose to exit the position. So again, as you can see, uptrend, this was his entry, and he was anticipating the breakthrough that eventually came in a little bit later, but because the market continued to rise, he lost quite a few dollars and he exited the trade. After he exited, the market was oscillating between the support resistance for a while here at the top, and then broke through to a downtrend. So again, then it hit some support levels, continued in a slight uptrend upwards from there. The timing was a little bit off, but I believe the technical analysis was quite good, as he was entering what he thought was the peak and the bounce from resistance level at the top. It wasn't a bad technical analysis. The timing was a little bit off, and maybe the position was a bit bigger because $1,000 was quite a big loss. Either way, Stefan learned from that mistake and he continued to close his cycle with a beautiful profit, so good for him. Stefan's monthly performance is a proof of his consistency. He is training in his 7th cycle. From his first 6 cycles, he managed to earn more than $8,000, which is a beautiful result. So what can we learn from Stefan's approach? I'll just list some key takeaways. The first one is follow money management. Setting stop loss and take profit is essential. Adapt to market behavior. Even when you're in profit, keep some reserves if the market direction is uncertain. So basically, I love that he partially exited the position in the first trade. That's a really good way to go, as he secured some of the profits but was still in the trade to go for a bit more. And don't hesitate to close losing positions. Even though the second trade I showed you guys, he lost $1,000 and he exited the position quite early, because retrospectively we could see that the market changed afterwards and break through and he would make quite a few money. It was good that he exited the trade, because even though the technical analysis was there, the timing was off, and at that point he couldn't have known what could happen, and it was a smarter decision to exit and stop the loss at this level, not to risk blowing his entire account. If you found Stefan's approach interesting, I have 3 another tips for you guys from top traders. So the first one is set clear entry and exit points. Know in advance at what price you'll enter a trade, where you'll take profit, and where you place your stop loss to minimize losses. Then stick to a risk management strategy. Decide on fixed percentage of your account to risk per trade. Often it could be 1 to 2% to protect your capital over the long term, but that's up to you. You should find your level that you're able to risk. And then stay disciplined. Emotional trading, such as holding on to a losing position hoping it will turn around, can quickly lead to bigger losses. Same as FOMO, fear of missing out, or revenge trading, where you're basically trying to quickly win back what have you lost. Either of those is not good and always leads to big losses. I want to thank you guys for watching. To learn more about our traders and strategies, follow us and subscribe, and I will see you in the next one. See you guys.